Investing in Real Estate for Beginners. Welcome to Be a Baby Billionaire. Real estate investment offers a multifaceted approach to wealth accumulation and financial security, leveraging the tangible nature of property assets, passive income streams, and potential for long-term appreciation. In this comprehensive exploration, we delve into the diverse facets of real estate investment, spanning from its pivotal role in hedging against inflation to the nuanced strategies for navigating rental property investments and the intricacies of real estate syndication and fractional ownership. Delving deeper, we uncover the tax advantages of real estate investments and the challenges landlords face, juxtaposed with the passive investment opportunities afforded by real estate investment trusts, REITs, and real estate sponsorship. Additionally, we dissect the liquidity dynamics between real estate investments, stocks, and bonds, and evaluate the potential returns across various real estate investment avenues. 1. The role of real estate in hedging against inflation. Real estate is a tangible asset with intrinsic value, making it a popular choice for investors seeking protection against inflation. When inflation occurs, the prices of goods and services rise, eroding the purchasing power of currency. However, real estate values and rental income tend to increase in response to inflation, helping investors preserve their wealth. One reason real estate serves as an inflation hedge is its limited supply. Land, in particular, is a finite resource, and demand for properties often exceeds supply, especially in desirable locations. As a result, real estate prices tend to appreciate over time, allowing investors to capture capital gains. Furthermore, rental income from real estate investments can also increase during inflationary periods. Landlords have the flexibility to adjust rents periodically to reflect rising costs and maintain profitability. 2. Strategies for investing in rental properties. Investing in rental properties requires careful consideration of various factors to maximize returns and minimize risks. Here are some strategies commonly employed by real estate investors. A. Buy and hold. This strategy involves purchasing rental properties to hold them for the long term to benefit from property appreciation and rental income. Investors focus on acquiring properties in stable markets with strong rental demand and potential for appreciation over time. B. Fix and flip. In this strategy, investors purchase distressed properties, renovate them to increase their value, and then sell them for a profit within a relatively short time frame. Successful fix and flip investors possess renovation expertise, market knowledge, and a keen eye for identifying undervalued properties. C. House hacking. House hacking involves purchasing a multifamily property, living in one unit and renting out the remaining units to generate rental income. This strategy allows investors to offset their housing expenses while building equity in the property. D. Short-term rentals. Investing in vacation rentals or short-term rental properties can yield higher rental income compared to traditional long-term rentals. However, managing short-term rentals requires continuous marketing, guest communication, and property maintenance. 3. Benefits of diversifying your investment portfolio with real estate. Diversifying your investment portfolio with real estate offers several significant benefits. Firstly, real estate investments have historically shown a low correlation with traditional financial assets like stocks and bonds. This means that when the value of one asset class fluctuates, the other may remain stable or even increase in value, helping to smooth out overall portfolio returns. By adding real estate to a diversified investment portfolio, investors can achieve greater stability and potentially lower the overall risk of their investment portfolio. Additionally, real estate investments provide the potential for capital appreciation over the long term. Real estate values have historically appreciated, driven by factors such as population growth, urbanization, and economic development. 4. Tax advantages of real estate investments. Real estate investments offer various tax advantages that can help investors minimize their tax liability and maximize their after-tax returns. One significant benefit is deductions for mortgage interest and property taxes. Investors who finance their real estate purchases with a mortgage can deduct the interest paid on the loan, as well as property taxes paid to local authorities. These deductions can significantly reduce taxable rental income, increasing the net cash flow from the investment. Additionally, real estate investors may benefit from depreciation. The IRS allows investors to depreciate the value of their rental properties over time, even as the property may appreciate. This non-cash expense can offset rental income, reducing taxable income and lowering overall tax liability. 5. Challenges and considerations of being a landlord. Being a landlord presents various challenges and considerations that investors must navigate, requiring landlords to address repairs, upkeep, and tenant requests promptly to maintain property value and tenant satisfaction. Additionally, tenant management involves tasks such as rent collection, lease enforcement, and conflict resolution, requiring effective communication and knowledge of landlord-tenant laws. Financial challenges, including non-payment of rent and unexpected expenses, also pose risks to landlords. Moreover, vacancy risk can lead to lost rental income and increased costs, emphasizing the importance of effective marketing and tenant retention strategies. Overall, successful landlordship demands dedication, resourcefulness, and a thorough understanding of both the property market and legal obligations. 6. Exploring real estate investment trusts, REITs. Real estate investment trusts, REITs, offer a convenient and accessible way for investors to gain exposure to the real estate market without directly owning or managing properties. REITs are companies that own, operate, or finance income-producing real estate across various sectors, including residential, commercial, and industrial properties. By investing in REITs, individuals can access diversified portfolios of real estate assets and earn dividends from rental income and property appreciation. REITs also offer liquidity, as shares can be bought and sold on public exchanges like stocks. However, investors should consider factors such as market conditions, management quality, and distribution policies when evaluating REIT investments. Additionally, tax implications and fees associated with REIT investing should be carefully assessed to ensure alignment with investment goals and risk tolerance. 7. Real estate sponsorship, a passive investment opportunity. Real estate sponsorship offers investors a passive investment opportunity to participate in real estate projects without the day-to-day responsibilities of property management. In a real estate sponsorship arrangement, investors provide capital to a sponsor, who is typically a seasoned real estate professional or company, to fund the acquisition, development, or operation of a property. The sponsor identifies and manages the investment opportunities, handles property management tasks, and seeks to generate returns for investors. Investors benefit from potential income and appreciation generated by the real estate projects while relying on the expertise and experience of the sponsor to make informed investment decisions and manage the properties effectively. Real estate sponsorship can be an attractive option for investors seeking exposure to real estate assets with passive involvement and limited time commitment. 8. Fractional investing in real estate. How it works. Fractional investing in real estate allows individuals to invest in partial ownership of properties, enabling them to access real estate investments with lower capital requirements and reduced risk. In fractional investing, multiple investors pool their funds to collectively purchase and own a property, with each investor owning a fraction or share of the property. This approach allows investors to diversify their real estate holdings across multiple properties and markets without the need to buy entire properties outright. Fractional investing platforms facilitate the process by offering digital platforms where investors can browse and invest in fractional ownership opportunities. Investors can choose from a range of properties, including residential, commercial, and mixed-use properties, based on their investment goals and risk tolerance. Fractional investing provides investors with the potential for rental income, property appreciation, and portfolio diversification, while offering liquidity and flexibility compared to traditional property ownership. 9. Comparing the liquidity of real estate investments versus stocks and bonds. Real estate investments generally offer lower liquidity compared to stocks and bonds. Stocks and bonds are traded on public exchanges, allowing investors to buy and sell them easily and quickly at prevailing market prices. In contrast, real estate transactions involve longer time frames and more complex processes, such as finding buyers or sellers, conducting due diligence, negotiating contracts, and completing property transfers. Additionally, real estate properties are illiquid assets because they cannot be easily divided into smaller units or sold on short notice. Selling a property typically requires finding a buyer, negotiating terms, and completing the transfer, which can take weeks or even months. While stocks and bonds offer high liquidity, real estate investments provide stability and potential for long-term growth but may require a longer investment horizon and commitment. 10. Evaluating the potential returns of different types of real estate investments. The potential returns of different types of real estate investments vary depending on factors such as property type, location, market conditions, and investment strategy. Generally, residential rental properties offer steady rental income and the potential for property appreciation over time. Commercial properties such as office buildings and retail centers may provide higher rental yields but also entail higher operating costs and vacancy risks. Industrial properties, such as warehouses and distribution centers, offer stable income streams with long-term leases and lower maintenance costs. Additionally, investing in real estate development projects or value-add opportunities may yield higher returns, but also involve higher risks and longer investment horizons. Overall, investors should conduct thorough due diligence, assess risk-return profiles, and align their investment objectives with the characteristics of different types of real estate investments to optimize their investment returns. 11. Long-term wealth building through real estate investments. Real estate investments offer a powerful vehicle for long-term wealth building due to their potential for appreciation, passive income generation, and leverage. Over time, well-selected real estate properties have historically appreciated, providing investors with substantial capital gains. Additionally, rental income from real estate investments can serve as a reliable and consistent source of passive income, which can be reinvested to further grow wealth. Furthermore, real estate investments offer the opportunity to leverage borrowed funds to amplify returns. By using leverage, investors can control a larger asset base with a smaller initial investment, potentially magnifying their returns over the long term. With careful planning, strategic property selection, and effective management, real estate investments can be a cornerstone of a diversified investment portfolio and a key driver of long-term wealth accumulation. 12. Talking points. Real estate investments stand as a robust avenue for individuals, particularly beginners, seeking to build wealth and secure their financial future. From its intrinsic value as an inflation hedge, real estate offers opportunities for both passive income generation and long-term wealth accumulation. Moreover, diversification benefits and potential returns of real estate investments underscore its attractiveness in an investment portfolio. However, navigating the challenges of being a landlord, understanding the nuances of various investment avenues like REITs and fractional ownership, and remaining attuned to market conditions is essential for success. By harnessing the power of real estate investment and diligently assessing risks and opportunities, beginners can embark on a rewarding journey toward financial prosperity and stability. Time for the soft question. If you are thinking of investing in real estate, what are your reasons to jump in? Please share your thoughts and experiences in the comment section below. This will help everyone learn and grow together. Subscribe with us and learn. If you find the information in this video valuable, please subscribe and share it with family and friends. Your support will help us create many more high-quality videos like this. Please support us, please hit the like button and the notification bell to be notified. Click on these 2 videos shown here to explore even more. The contents of this video are for educational and informational purposes only. Thank you for watching.